My name is Albert Geigel. I'm the principal of MW Partners, and I'm going to talk on service trusts, and I'm doing that in detail. So service trusts, how do they really work? Service trusts are used in many professional businesses such as legal, accounting, medical and dental. The trust, which in some cases may be a company, is usually a discretionary family trust that provides administrative services, employment of staff, provision of premises, plant and equipment and other clerical services, which means that the dentist is freed up to concentrate on generating dental income from their patient base. The use of service trusts are accepted by the ATO, provided the arrangement is in accordance with ATO rulings and guidelines, which have now been enforced for more than 10 years. Taxation ruling TR 2006/2 is the main ruling which governs all service trust arrangements and predominantly says that where the service fees and charges are real and genuine cost of the business, then those fees are deductible in full. For most professional services business, the service fees and charges are calculated by way of a percentage markup on the expenses incurred by the service trust. The percentage markup method restricts the amount of profit that the service trust can generate, as typically most costs can't be marked up by more than 10% in accordance with that ATO ruling. This means if the costs of operating a practice were, say, $450,000, then the maximum service fee charged will be $495,000, 10% more, resulting in a profit to the service trust of $45,000. Medical and dental practices are entitled to use a different calculation method in accordance with the ATO guidance booklet, Your Service Entity Arrangements, which is NAT number 13086 if you'd like to look it up, and where the ATO accepts the dental industry standard of up to 60% of gross fees as the maximum amount that can be applied to cover the expenses of running the practice. So they're industry standards. If we extend that to the previous example, where the practice may generate $1 million in fees, have operating costs of $450,000, then the profit in the service trust would be $1 million at 60%, $600,000, less the $450,000 in costs, profit of $150,000. This is obviously substantially better than the $45,000 in profit in the previous example, as it means that dental surgery can now distribute up to $150,000 in profit to beneficiaries and family members associated with the service trust, who are likely to have a lower tax rate than the practicing dentist owner. Dentists may ask why they can't achieve the same result by operating as a sole trader or a company or a trading trust. In cases where most of the fees are generated by the principal dentist, then the ATO considers this income to be personal services income. And even where a corporate entity is utilised, it's not possible to distribute or reallocate personal services income. This means all of the income and all of the profits of the business are caught in the hands of the principal dentist, and in these circumstances, the principal dentist is also prohibited from paying a spouse or associated person for wages or administration services such as bookkeeping. Further information regarding personal services income can be found in Income Tax Ruling IT 2639, which should be read in conjunction with another ruling, IT 2503, which relates to the incorporation of medical and other professional practices. To simplify what I said earlier, for the most effective use of a service trust, the principal dentist should receive all the fees in their own name and then reimburse the lab fees to their service trust as payment of a 60% service fee. This means the principal dentist will earn no more than 40% of the gross fees after labs, which is the same as if they were a contracting dentist to their own practice. The profit of the business is then available to be distributed to family members. It's not caught with the personal services income rules, and that's going to get it at a lower tax rate. Potentially also, if they use a corporate entity, that's going to be at a tax rate of 30% or less.